I used to have several sites. Now I kind of like the grower's edge. It gives me that cash max. You can tell it which markets you're looking for, and it will tell you what your highest net back is based on the price they're paying at that time and the basis that they're paying. And that's pretty handy because I don't have to go to so many different sites.
Good afternoon, welcome to GrainTV. My name's Cody Bills. Today was the last day before first notice day for those May corn contracts. I certainly hope everyone is out of them and is rolled to July. If you want to take a look at the grain hedge trading platform, let's see where we closed off the day. Corn trading up 2 3/4 cents, soybeans up 12 cents, wheat in Chicago up 6 1/4 cents, Kansas City wheat trading up 4 1/2 cents, and Minneapolis wheat up 7 1/2 cents here on the day. I think one of the main reasons why we saw a little bit of a boost here to the grain market and the overall commodities here is just the U.S. dollar selling off here early part of the morning. We did get GDP numbers out for the first quarter. We came out at 0.2% growth annually. Very disappointing when you look at last quarter, which we were around 2.2. So really kind of nosedive there in the GDP numbers. What this does is it makes it unlikely that the Federal Reserve is going to raise interest rates because of the softening economy, which they have kind of indicated in their statements, that it's unlikely that they're going to make any moves here in the near term to raise interest rates. What that means is that the U.S. dollar sells off. We've seen this rally up until really up until March here, and it had a lot to do with the fact that anticipation for an increase in rates. We just haven't seen that from the Federal Reserve. This is just another piece of information that kind of kicks the can down the road a little ways and postpones the inevitable rate increase, which will happen at some point, but doesn't seem to be on the horizon here. That hurt the dollar. That helped grains, that helped corn, soybeans, and wheat. One thing we want to talk about here for corn, let's take a look at the daily corn chart. You'll notice we're right on that downtrend line, providing a little bit of support here yesterday. We saw some continuation in that support today. Also supporting corn out of Rosario Grain Exchange, we did see boat captains down there that usually help guide these cargo ships into port. Basically, they're on strike. They want higher wages. What this does is it possibly, it really throws a wrench into things, could hurt logistics here, and really could cause a little bit of an increase here in corn prices, could see a little bit more export sales get pushed onto the U.S. books here when it comes to meeting obligations. We did get a nice export sale out this morning, 130,000 metric tons of corn, old crop, sold to Taiwan, so that also helped corn prices here today. While we're on the topic of corn, we can talk about the ethanol production report that came out today. We saw production down 9,000 barrels per day, another decline in production. We saw 921,000 barrels per day. So this is a little bit disappointing. During this time of the year, we would typically start to see an increase, kind of a ramp up in production. We have yet to really see that. We've been declining really since November when we kind of peaked out on weekly ethanol production. It's going to be interesting to see if we can turn that around. We did see a decline in ending stocks here by 545,000 barrels to 20.8 million barrels. Take a look at the ethanol production slide. As I mentioned, we've really been declining here since November when we kind of peaked out during weekly ethanol production. Typically, when you look at the 4-year average, which is the red line, and 2013 last year, which is the blue line, you'll see we typically start to ramp up production. It's going to be interesting to see if we get that kind of activity here in ethanol production in the months to come. We are still running well ahead of pace to meet overall expectations for ethanol production. We're up 5.2% year over year compared to the USDA's expectation of an increase of only 1.3%. Let's talk a little bit about soybeans here because this is very interesting. You know, yesterday we talked about soybeans trading up for the better part of the day, unable to hold on to those gains, falling below that 50-day moving average, which has acted as resistance. Today we blasted through that. I talked to you a little bit about this. I said I think the open is really going to be a big tell. Well, we tried to trade down in the open, but bought right back, and then we just started trending higher. And I think that right there just shows the strength especially on a Tuesday, especially right before first notice day. Sometimes you get these funny price actions. But one thing for producers out there that you should really be paying attention to is this November contract. The November contract for that 2015-2016 grain here, you'll notice when you draw a trend line from the bodies of the previous highs back in December, back in February, you'll notice that we have a resistance line that kind of comes right in contact with this 50-day moving average. I think this is going to offer up some significant resistance. Be cautious here. You might want to look at protecting some of that grain at this point going forward. We'll take another look at wheat here as well. One thing out in the wheat market, it did seem as though the agricultural ministry out of Russia here mentioned that it's likely that they could even raise or lift that export tariff here before July 1st. Bottom line here is they're most likely going to be voting on that mid-May. We're going to see if that happens, but when you look at that, that's something that would pressure wheat here domestically, because if they lift that tariff before expectations here, we could see more competition from the Black Sea region. That would again hurt wheat prices here in the U.S. But overall, I think what we saw is an overwhelming support here from the fall in the currency, from the fall in the dollar here. It helped lift wheat prices. And I think one thing that producers need to be cautious of is the resistance level here right around 485. That was a previous support level. We've touched on it twice. We fell through it 2 days ago. We turned around. I talked about this yesterday. Wouldn't be surprised if we retouch this and retest this 485 price level. I wouldn't be surprised if it offers up some resistance here in the days to come. So be cautious here, wheat traders. This might be a place where you may want to protect yourself, possibly a put at this point while the market's still moving higher. We have export sales out tomorrow. This is important. Obviously, this is very important. It seems like we're right around these resistance and support levels in the grain complex. So it's going to be very interesting to see if export sales come out and provide support, or if this is something that's going to kind of cap this rally that we've seen over the last couple days. Basically, expectations for corn between 500 and 700,000 metric tons. Soybeans expectations between 50 to 250,000 metric tons, and wheat expectations between basically no sales to 100,000 metric tons. We'll have to see if we get some positive sales. We'll be blogging about that early on in the morning, sending out the morning commentary to all Grain Hedge customers. If you want to become a Grain Hedge customer, go to GrainHedge.com, sign up for that 14-day free trial, and you'll see what it's like to have live quotes in your hand, on your mobile phone when you're away from your desk, being able to place those hedges when the opportunity presents itself. These opportunities don't wait around until you get back in the office. It's a fast-moving market, and we're here to help you make sure that you stay on top of that marketing throughout the year. Thanks a lot for tuning in. We'll see you here on Thursday.